Okay, good morning, everyone. Welcome to today's market snapshot. Today, the 2nd of August, 2023. Morning, Caspar, morning, Lemuel, morning, Diana. You're most welcome to today's snapshot. Today, we have quite a number of events. And of course, the major breaking news we have today is Fitch's rating that has just come in. It came in during the Asia session. And this rating is providing to us some indication of what is really happening with the US economy. So I'm just going to go straight to it, then we can just run through it and see what's there. Morning, Trapsky, morning, Diana, morning, Khashoggi. You're most welcome to today's snapshot. Okay, so you should be able to see my screen shortly. The one that has the rating. Yeah, so here we have the Fitch rating. There are a few key things I just want to point out here. Majorly, of course, Fitch has indicated that the outlook is stable. However, this rating has come at a time when the market has been looking out for whether the risk sentiment is likely to move from extreme greed to a bit of caution. And I feel this catalyst now has brought in the caution at a time when the market is looking for one. First of all, there are quite a number of key rating drivers here. The major one, which I want to go to, is the one that is talking about the economy to slip into recession. So if you recall from the Fed conference that we had last week, we had an indication from Powell. He said that his staffers did not forecast a recession taking place within this year. But when you go to Fitch's rating, it is indicating that a recession is likely to occur in the US in Q4 2023. Q4 2023 is October to December, and it could also continue into Q1 2024. So this has provided a lot of tension to the markets during Asia and Euro session. As you can see, we're having quite a lot of selling taking place on the indices, especially in Europe. We have most of the Euro stocks plummeting seriously on this rating. Additionally, we also have an indication from Fitch that the agency sees US annual real GDP growth slowing to 1.2%, not of course contracting, just slowing. And of course, that is from 2.1% to 1.2% in 2022, an overall growth of just 0.5% in 2024. Now, overall growth of 0.5% 2024 is really muted growth. So this is actually quite a bit of a rating we're having coming in from Fitch. If you go to Fed tightening, we are seeing here it is indicating in its rating report that the Fed raised interest rates by 24 BPS in March, May, and July 2023. Fitch expects one more further hike to 5.5% to 5.75% September. So when we check the Fed Watch tool, that was before the meeting, it indicated to us that we are going to have the Fed's the range of its hikes remaining between 5.25% to 5.5%. But now here we have Fitch indicating that it's likely that the Fed might consider a rate hike, taking the upper band of its range to 5.75%, which could put added pressure to that. Now, if you go to the economic calendar and you check right here, that is on my side where we have the indices, we have VIX. VIX is the fear index. VIX as of now, which is 6 minutes past 11, is currently up 15%, which is an indication that fear seems to have returned to the market, and now it's the fear is actually quite high as of today EU session. So we might see a lot of pressure, especially on the US indices. Those of you that are trading the US indices and the Euro indices, you might see some downward pressure occurring on them into mid-EU session and potentially even later in the day. Yeah, so yeah, morning Sam, morning Kelvin. So I'll handle the questions bit by bit. Let me first run through the calendar. So for today, the key events we have, first one, we have the ADP report. So as you know, last month when we received ADP numbers, that was the numbers that we got for June. There was a spike in the numbers from 267,000, and that number spiked to about 500,000. That was 497,000. And this, of course, put downward pressure on a number of assets. We had the majors which have euro and the pound, as well as also AUD as base currencies, had a lot of selling pressure. However, I don't envision us having a spike up in ADP. We are most probably going to come back to our average range for the payrolls, which has been somewhere at least below 300,000 and maybe towards 200,000. So I suspect that if we get a lower ADP number, we might see risky assets maybe having some momentum. However, this Fitch rating has kind of added a bit of fear in the market, and despite us having quite a number of data sets coming out today, the fact that we have the Fitch rating coming in and indicating that recession is actually likely to happen, it's now added a lot of risk in the market. Additionally, I'm sure you all know Janet Yellen is the Secretary to the Treasury, which is in the US, and she indicated today that the Fitch's rating was actually an outdated rating, and that a lot of what was raised in the rating has actually already been handled by the government. Please also take note that credit card debt in the US is at extremely high unhealthy levels. And of course, debt seems to be running within the bloodstream of the US as of now. And we know that even their recent debt ceiling, they just had their debt limit maintained, but they pushed the time to about 2025 for them to actually revise their debt ceiling limits. So debt is actually still something that is still a topic of discussion over in the US. Now, speaking about oil, we have had oil having a lot of upside momentum throughout the week before we cross over to the charts, and that has largely been because of supply cuts in the different countries, especially Russia as well as also UAE. So I suspect today's data which we are getting out from crude oil inventories is going to potentially put some pressure on oil. If we get crude oil inventories coming in lower, then it could extend oil's rally upwards to 85, maybe potentially even closer to $90 a barrel. That is for WTI in the US. Yeah, so let's quickly cross over to the charts and see what we are seeing currently on the charts. We have quite a bit of movement. Markets are looking quite great. A lot of volatility, lots of trading opportunities available in the marketplace as of now. So let's go check out and see what's really happening as we cross over to the charts. So yesterday we also had earnings for AMD. AMD is they make chips, computer chips for cars. They make chips as well also for computers and all these different products. So I expect AMD, of course, we actually had AMD pushing higher. Yesterday, we might see, AMD potentially breaking higher levels, because when you check AMD's price over on the after hours, that's US after hours, it's actually up about it closed up about, I think, about 3%. So I suspect we might see a bit of a push on AMD. However, though, please take note that the Fitch rating, of course, is putting pressure on tech stocks. Remember that whenever there is fear, usually position sizing is cut on the tech stocks. Yeah, so Fitch, AMD is up about 3%. You can see here that actually we might see a bit of a push, a higher push happening on that one. Yeah. So let's cross over to the charts and see what's happening on other assets. Okay. So let me just run through here. Just run through. Okay, Apollo, you're saying hi. It's actually Nobert. Rufas is not on today. Yeah, so I'm going to handle that. That's regarding WorldCoin. So I'll handle that at the end of the session. So we'll just see what happens there with that. Yeah. All right. So let's, first of all, I want to start with the DE40. So DE40 having a lot of selling pressure, as you can see there. And of course, if you add the Keltner channels here, we are seeing that a lot of candlestick price action is taking place below the lower channel, which is an indication that price is potentially going to continue moving lower. We are going to use the exponential for this one since it smoothens price better, and we're going to use the high price. So you can see DE40, which is the DAX, quite a lot of selling pressure, and we might also see more selling taking place for this particular currency, for this particular stock index. We're also going to check out Euro USD. So Euro USD, when we last met, that was last Wednesday, we indicated that we were seeing a downside movement on it. And of course, this downside movement is still maintained. We still fail to break we failed to break this descending trend line here, and as you can see, it has still been respected. I suspect that because of a deteriorating positive outlook for the Eurozone, we might see Euro USD testing lower levels, and also currently because the banks achieved their level of 1.12, that was a target for about Q3 2023, we are not seeing a lot of upside momentum possibly happening for this pair. So we might see it moving lower. If we manage to break above this descending trend line, we are potentially going to be able to see a price moving higher. But as you can see, quite a number of bearish flags on this particular currency pair. And of course, this is an indication that price is potentially moving lower. Okay, so I'm going to cross over to some of the JPY pairs. So currently, JPY, of course, from last Friday, we had a lot of buying taking place for it. Quite a number of breakouts as well, also taking place on the Keltner channel. For the upper channel, you can see we had a number of breakouts. I still suspect that JPY is going to still sustain some downside pressure. On Monday, we saw some news coming in from Bank of Japan. They indicated that they are going to continue with unscheduled bond buying. And of course, the purpose for that is that if they continue with the unscheduled bond buying, it's likely that will also put some downside pressure on the JPY, because when they buy bonds, it reduces the value of the JPY in the open market. And of course, we know that increased liquidity of the yen provide some downside momentum for it. So I still suspect we're going to have some upside momentum taking place for this particular currency pair. So let me just run through the questions. Yes, Apollo, you're saying hi Nobert. Of course, Rufas not on today. On cryptos, what is WorldCoin? Why are eyeballs important, and why the 8K inducements? I've seen a craze of buying of the coins at KS 200 Kenya shillings. Are they doing this globally? Yeah. So as of course, those of you that had keen interest to read the terms and conditions for WorldCoin, they indicated that much as they are available in the US, the terms and conditions protect them, because they said that they are not open to having citizens in restricted territories. And US is among those territories. So we know that, of course, if you're in the US and you're getting your eyeballs scanned, WorldCoin is already protected in that. In their disclosure, they have clearly indicated that they are restricting it there. Yeah. So the other thing, of course, to speak about it, I don't follow WorldCoin that much, but what I know is that, of course, there are privacy concerns in some countries. I've also heard, of course, from Kenya that they are likely to hold a scanning of eyeballs, and I suspect that data privacy issues are likely to arise from there. However, of course, even from the end of the market, don't expect a lot of upside for the token price. This is because they are controlling the price. It's range bound. So it's not likely that there's going to be a lot of upside taking place for the WorldCoin token. Yeah. So it could be maybe an issue whereby if you get them, you most probably need to get rid of them in the marketplace. Yeah. Please explain what the dollar index stands for, what its importance, and if it also has support and resistance. And yeah, so the dollar index is essentially just, it helps us to track the performance of the dollar. And of course, there are a basket of currencies that go into the dollar index. Some of them, the biggest one that we have is the euro. And of course, the euro contributes majorly to how the dollar index performs. So currently, of course, dollar index has been having some kind of momentum to the upside, and of course that has been from last week, where we had very strong GDP reading. I suspect that we might have continued upside momentum for it, and we might also want to watch how it performs with ADP digits. If we get ADP numbers that to the upside, it's likely that we are going to have potentially going to have DXY potentially continuing higher. We have to just wait. It's just a wait and see game, since we have a slew of data. We have NFP coming out on Friday. If we get higher NFP numbers, definitely it's going to provide some upside momentum for the DXY. Okay, yeah, someone is asking about gold. So let's just run to gold. So gold was in a downside trajectory, and of course, as you can see, we had a bullish flag. If you watch the snapshot that we had on Monday, Rufas indicated that clearly to you. There was a bullish flag there, which of course was short-lived, and we saw gold retracing lower. The reason why gold has still failed to break below the key level of 1943, and where we are likely also to have gold retesting ADP levels of 1895. The reason why that may not happen today is because of the Fitch rating. The Fitch rating has killed risk sentiment, and now we are going to have a lot of market players moving over to risk of assets, and gold is among them, which of course will provide gold potential upside momentum. We are likely to see gold heading back higher. And of course, as you can see on the M15, it has managed to break above that descending trend line. So I suspect that gold will potentially continue to move higher and maybe retest this descending trend line, which we have here on the M15. So gold, as of now, likely, of course, to move higher on a bullish bias. But if we get ADP coming in later and ADP comes in lower, rather much higher, then of course gold may continue its decline. However, the decline might not be that strong because we have the Fitch rating, which is providing upside momentum for gold. Now, remember, if we have recession woes, investors are likely to cross over, or traders are likely to cross over to buying gold and cutting their buy bets on it. Mr. Nobert, so we might have a recession in the USA. So recession, a technical recession, is where we have two quarters of contracting GDP, where GDP is negative. That, of course, as of now, we don't have that yet. So technically, the US cannot enter into a recession. However, we also need to wait for guidance from the central bank governors. The other thing, of course, is that we know the guidance has from the Fed, given with its past commentary, has been quite vague. They don't really tell you exactly what's likely to happen. So if we get two contracting quarters of GDP, then it's likely going to indicate to us that the US may be entering into a recession. If we don't get that, then of course it's likely that we are going to have US not entering into a recession. However, that Fitch report has opened up the eyes to the different market players that it's likely that maybe the Fed is not really giving us exactly what's happening with the economy that's in the US. Okay, so let's talk. Mercy, you're saying, what do you think about the Japanese yen given the credit downgrading, while Japan is still insisting on keeping very low interest rates? Yeah. So the reason why of course, Bank of Japan is keeping low interest rates is that they still have the inflation targets higher. And of course, the reason why they need enough liquidity in the market is that they want to boost consumer spending, which of course in turn will also help to boost inflation. So I need to read through the Fitch rating and see where it indicates anything about Japan. However, we know that that JPY is a risk on asset, rather risk of asset. So it's likely that we might see some kind of momentum flowing into JPY, which of course will put downside pressure potentially on the Japan on the JPY pairs. That's what the pairs where where the JPY is not the base. Yeah. US oil. So US oil, as I indicated earlier, we have quite a number of we have some reports coming out for US oil, but the upside momentum is still intact for it. If you check on the M15, there have been quite a number of bullish flags there for oil. There's a bit of a pullback, of course, coming in. That pullback is likely because of profit taking, because it's been having an upside move all the way from early last week. We might see a bit of a pullback for it, and then of course that pullback will resume upwards. Rather, the pullback will pause, and we might have an upward move if we get crude oil inventories coming in higher, rather lower. It could put some upside pressure for crude oil. Is the credit rating by Fitch sustained? Masio asking. So now, the Fitch credit rating, I don't know what you mean by sustained, but of course it has first of all killed risk sentiment. So we're lucky that even VIX, of course, if you check VIX is currently up by about 20%, closer to almost 25%. And of course, the reason for that is because of market sentiment. The risk sentiment has been cut. We need some guidance, of course, from the different central bank governors, if they can come in to speak, of course, on the Fitch rating. However, the latest we have from one of them, who is Janet Yellen. Janet Yellen indicated that it's likely that we are potentially going to have the Fitch rating is actually outdated. So, of course, we are not yet sure what that means, because of course, if they have indicated to us that we are likely to have a recession in Q4 2023, we need some guidance from the central bank governors. However, if they don't guide us, then we need to keep monitoring and seeing what's happening with that. Yeah. Tony, sorry for that. I'm saying you blew your account on a buy for gold. So I don't know whether you had your risk levels intact. Remember, you have to have risk management. However, I think your buy most probably didn't work yesterday, because gold was on a downward trajectory. That's because it rejected this area here. You can see that there's a downward descending trend line there that gold failed to break above. So gold actually was having a downward move all the way up until this Asia session, when we had the Fitch report coming in and telling us that there are quite a number of things are likely to happen in the US, which is a contraction on GDP, as well as also potential recession in Q4 2023 and Q1 2024. Okay, so we cross over to USD JPY. So USD JPY has currently an upside bias. And of course, the reason for that is been a sustained JPY weakness from last Friday. And I expect that is likely to continue. Of course, there's a slight pullback. That's, of course, because of the Fitch rating that we had. We had a bit of a pullback, which, of course, put some downside pressure on the dollar. But we are likely to see JPY continuing upwards. If we use our descending trend line here, we can see that actually JPY still has some upside momentum to move. The Bank of Japan will intervene upwards of 150 yen, like it did last year. Last year we had the Japanese, the Bank of Japan, interfering in the markets when they actually had liquidity operations to reduce the JPY supply, and of course that put some downside pressure. So if the Bank of Japan interferes, then we might see JPY pulling back. However, for us to have a continued move upwards, we need to break above this descending trend line here. But when we zoom in a bit, when we use our Keltner channels, the Keltner channels show us that there are quite a number of breakouts. You see these breakouts that you're seeing here. This breakout here, there's also another one right here, which is an indication that price is moving to the upside. So we might have a temporary pullback on profit taking, and then a rally resuming there. So AUD CHF, let's cross over to AUD CHF. So the Australian dollar has been fairly weak. And that's, of course, the reason for that has been because of indication that we are not likely to have rate hikes happening by the Reserve Bank of Australia, and this is likely to provide some downside pressure on the Australian dollar. So it's not only AUD-CHF, quite a number of pairs of AUD pairs actually moving in line with that, and this is a no-brainer. We're having a downside move taking place for UDJPY. We're likely to have this move continuing all the way, and we're potentially going to see, if we fail to break this descending trend, this descending trend line here, we might see AUDJPY continuing to move lower. However, when we zoom in a bit on our moving averages, we are seeing that the longer period moving average is higher than the shorter period moving average. Remember, with moving averages, whenever the upper moving average is the longer period one, it's an indication of a downward move. So which means it's likely that AUDJPY may continue having its sell-off later into EU session. Okay, when there is more currency in the market, JPY, does this affect the market? When there's increased liquidity of JPY, then of course it provides a sustained weakness for that particular currency. For the Japanese yen, for that case, it's likely that we are potentially going to see a JPY having some sustained weakness on the back of increased liquidity. Apollo, you're saying, what credibility do we place on the Fitch rating versus Janet Yellen? So that's a good one. That's a good one. So Janet Yellen, I need to read her report and see essentially what she's saying. Hers was just really commentary, and she indicated that most of what was being spoken about in the Fitch report had been handled, or action had already been taken by the Congress, by the US Congress. So I suspect that the markets most probably, I don't think they can shrug off the rating. And the reason why the markets have not shrugged off the rating, and that's why when you check on VIX, which is the fear index, VIX is up about 20%, closer almost to 25%, you see. And the reason for that is because of that rating. So I suspect that the market most probably will still consider the rating, and that if Yellen continues, of course, with what she's saying regarding the outdatedness of the report, we need to get more guidance from her, because recession has been on the table, off the table, on the table, off the table, and now it's back on the table. The last we heard from Powell was that the staff has had not forecasted a recession in the US for towards the end of the year. But now here we have a report indicating to us that we are likely to have a mild recession. So we need to have more commentary on this, likely maybe from the central bank, the Fed governors in the different states later in the day. So that's it, I think, for today. Quite a number of events, quite a number of catalysts coming into the market, and we're likely to see how that plays out. So the other part of your question, you're saying versus the lagging aspect of the interest rates. Yeah. So of course, we know that the Fed has indicated to us that their policy impact it takes time. So even the impact of the interest rates, of course, what we are seeing now, Apollo, is that we're not having contracting GDPs for the US. So it's likely that maybe we consider that we have dodged hard landing, and we're likely to have a soft landing. However, what we are seeing is that there are still quite a number of tight financial conditions. Just earlier this week, we had a bank collapsing, and the FDIC immediately came in and handled the issue. So we are likely to see, continued sentiment coming in there. So we have to just keep an eye and see how things develop. Yeah. So the Fitch rating, Apollo, is there. I've shared it. You should be able to read it. Mwiti, you're asking about GPP USD. So BOJ conduct a special bond operational. Can you comment on this? Yes, that one is for them to actually, when they say bond buying, when they buy bonds from the public, they are providing them with liquidity, through the interest that they pay. So that, of course, then increases the amount of yen available, and of course then helps them to achieve their targets of inflation and all of this. Yeah. So with potentially, of course, we have to wait and see how that plays out in the market. And of course, like I've alluded to earlier, JPY is having sustained weakness because of that. Yeah. So we just have to wait and see what happens to that. That's it, I think, guys. Muito asking about GBPUSD is still having sustained weakness. That's on the back of dollar strength. And we have the Bank of England meeting, I believe, tomorrow, which of course will potentially indicate to us where it is likely to go after that. But currently, we're having a potential downward movement taking place for GBPUSD. It has broken. It has failed to sustain movement. It has failed sustained movement above this descending trend line here. So I suspect we are potentially going to see movement to the downside. So that's it for today. I wish you guys an awesome trading day, and I'll see you guys later in the week, and potentially even next week on Wednesday. Comment on BOJ reduction on the money base year-over-year to negative 1.3% from so that, of course, when they reduce their money base, they essentially, of course, that's also in line with their goals of increasing the liquidity for the Bank of Japan, so they can increase consumer spending, increase the amount of liquidity available for the Japanese yen, which in turn, of course, will help them to achieve their inflation targets. Yeah, so that's what that means when they reduce their money base. All right, guys, I wish you all happy trading and have a fruitful trading